Nifty remains decisively over 14,000 on hope of vaccination starting soon. Mid-caps lead the charge, financial sulk, and trading volumes remain thin.
Even as India's expert committee reviews 3 vaccines today, WHO has cleared Pfizer's vaccine for use, and Dr. Reddy's tells CNBC-TV18 that the Sputnik vaccine should be available for launch by late March or early April.
Veteran investor Ramdev Agarwal tells CNBC-TV18 that while a third of smaller enterprises may find it difficult to recover from COVID, their bigger peers will likely grow bigger, so earnings for listed companies will likely grow even if the economy falters.
Petroleum Secretary tells CNBC-TV18 increasing use of biofuels will be his ministry's most important initiative for 2021. Government will aim to meet 2030 targets for ethanol blended petrol and diesel ahead of time. The other focus will be to expand gas networks.
Auto sales for month of December start on strong note. Maruti and Escorts report double-digit growth in sales, and management commentary is positive.
2021-22 may see upgrades to India's GDP, says economists, but inflation too could come in higher than estimates. RBI's key challenges could be rolling back surplus liquidity and higher asset inflation, leading to instabilities in the financial sector.
Hello and welcome to the first edition of Business Lunch in the new year 2021. Wish all our viewers a very happy new year. 2020 had a lot of learnings for all of us, and we are hoping for a better and much more fitter and healthier 2021. So Sonal, definitely looking forward to a great year, and the market is really rejoicing this particular move. In fact, the markets are the only ones which have partied this year end, I think.
Absolutely, Nisha. I don't know about us or you and me. We haven't partied much, but markets, they partied in 2020. In 2021 itself, the start has been quite good. Nifty is comfortably above that 14,000 mark. Right now at 14,035. It's the mid-cap index that is seeing the biggest gains today. It's up around 1% as we speak. And the market breadth, that also is looking good. It's the ratio is 3:1. So we have 3 stocks on the advancing side versus 1 stock on the declining side. In fact, if we look at some of the buzzers this hour, we have L&T, which has surged this hour. In fact, it is at the highs of the day. A lot of stocks that are touching highs. So we have Asian Paints. That particular stock has been at a record high, has done really well in December, and that outperformance continues. So we have Asian Paints up for you. It's up around 1% as we speak. The other stocks that are doing well at this hour are the likes of IOC, ITC, we have Tech Mahindra, Adani Ports, Nestle India. So consumption also is the theme that is doing really well. And in the broader markets as well, we have some movers. So NCC Limited, let's get that stock up for you on screen. It's up around 6% because it has got good orders in the month of December, has been getting orders back to back. So that stock seeing some buying coming in. And we have a lot of stocks like Bank of Baroda, Siemens, Escorts, Adani Enterprises, all of them doing really well. So a lot of action in the broader markets as well. But it's time to get in some market veterans we had on our channel earlier. Sameer Arora and Ramdev Agrawal share their outlook for the market ahead in 2021 and the top sectors to bet on. Listen in.
We learned is that some of the old thinking has to change, but I'm not sure whether I have learned it and I'm going to permanently change it. But to, in March or April, when the news came that how the US Federal Reserve is going to, sort of defend the economy and the market, we have always said, said means read, and then maybe absorbed a little bit that don't fight the Fed and don't fight the central bankers. But this went beyond anybody's imagination, at least the imagination at that time that we all had about what the bankers can do, the central bankers. So that itself was a big thing. It's the same themes that we like, which is private sector financials, consumer, and tech pharma. Initially it used to be tech, then over the years tech pharma, and then you take whatever are the new themes for 15-20% of the portfolio, maybe 2-3% per name. Like we had PLI, two stocks. We had some rural play, one tractor play that you keep talking about, and some internet type stuff. Basically things which in the beginning we were not sure how far they'll go, and so you buy 2-3% in each. But otherwise the backbone is the three themes: financials, the IT as we should call it, and consumer.
We had wonderful year in 2020, which is very unusual given the pandemic situation. But we had a wonderful year, and a lot of surprises, I would say, which is the nature of the market. It surprises you. One of the things which I was always practicing, and I always believed, was that nobody can time the market, and at least I can't do it. So that proved to be absolutely what we call on dot. So buy right, sit tight, whatever you like, whatever you understand. That's the way to go in equity markets, not only in India, all over the world. Earnings growth will come because this number, what you're talking about, 30-35% growth, is made up of 2-3 very large, unusual items which were there in 2020. One is, of course, there's all the banking losses because of COVID poisons. That will not be there, hopefully. And second is the telecom losses, which the Airtels of the world, they booked in last year. So that will also not be there. So because of all this, 21-22 could be a very good year.
All right, so markets and those big market opinions coming in, we clearly know that the markets have defied the laws of gravity and have also divorced from the economic reality so far, but eventually it will all align. So let's now focus also on the economists and what they are projecting as far as growth for the next new year is going to be. And Lata has the analysis. Over to you, Lata.
Well, 2020 was the year when we saw an actual contraction of the economy by 25% in one quarter. But as we step into 2021, the economy gives us hope. CNBC-TV18 poll of economists shows that the GDP estimate for the current year, 2021, has been upgraded to just a -7%. Why do I say just -7%? Because just about 2 months back, a similar poll had thrown up -10%. So since then, there has been quite an upgrade. And mind you, this -7 is an average. It includes one reading by Morgan Stanley, which is only -5.7, and another by ICICI Securities Primary Dealer Unit, which is -6.4. So there are people who believe that there is a chance of a further upgrade from -7 to probably closer to -6. Now, what's even important is this FY22. A strong 10% GDP growth is expected. Again, there is an expectation of an upside risk to that 10%. What is important to note is that we will get this 10% after 5 years of continuous slowing or decline in the pace of growth. This is a bit unprecedented. We have had 4 continuous years of slowdown, in the 60s, but 5 years is for the first time. Now let's come to earnings. We saw that GDP growth is troughing out this year, but it looks like earnings growth troughed out last year, because this year itself, a poll of a brokerages shows, CNBC-TV18 poll shows that earnings growth of Nifty companies will rise by 25%. So Nifty EPS from 400 is expected to rise to 500 in the current year, and in FY22 it's expected to rise by a further 30% to 600 rupees. So clearly earnings upgrades or earnings will trough out before GDP, before the economy. Now, when you have upgrades of both economy, GDP and earnings, you are bound to have higher inflation. After all, higher aggregate demand brings in inflation. So if you notice, the inflation for the current year is actually averaging at 6.4. We have yet to get about the December, Jan, Feb, March readings. But if you look at the RBI's forecast, then the average for the current year is going to start at 6.4, which is the highest in 6 years, highest since the new CPI began. The point to note is that inflation is also getting revised consistently higher. In February of 2020, when RBI first put the forecast for the current year, 2021, they had forecasted inflation of 4 to 4.5%, And now look, by their own forecast, it's expected to average 6.3, 6.4%. And for first half of FY22, where we have an RBI forecast, the forecast is at 4.6 to 5.2, first half RBI estimates. Again, the CNBC-TV18 poll is slightly higher at 5.4. People are expecting it to be higher. Although food inflation will fall, the expectation is that commodity inflation globally, it is raging, and that might keep that inflation higher. So there's an upside risk even to that 5.4. And all this means a tough task for RBI. That's my last bit. RBI, battling, putting in a lot of money when growth is terrible is easy. But when growth picks up and inflation picks up, it's always difficult to know when to roll back the excess liquidity. The excess liquidity in the system, which banks are every day giving to RBI, is standing at 7 lakh crore. And beyond a point, when credit growth picks up, it can create a lot of dangers. In the first place, liquidity will, can push up inflation. The other reason is that if yields are kept very low, they can go to the wrong hands, like we saw, in the NBFC crisis of 2017. So, therefore, should yields be brought higher? That will be very difficult for the government, because government borrowing program is likely to be higher. There are going to be higher vaccine expenses. The PLI scheme is an additional subsidy issue. And then there are the usual running subsidies, especially after the kind of farm protests. You can't expect the government to roll back any of the subsidies. And it's not as if tax collections can in 1 year, really jump to normalcy. They could still struggle. So RBI's biggest challenge in 2021, I mean, it's not going to be as easy a year as 2020. It will be definitely more challenging. And the biggest challenge will be how to roll back the excess liquidity without creating disruption.
Absolutely, Lata. Thank you so much for joining us with those pointers. But we also spoke to Anant Nageshwaran, who's the PMEAC member, and Upasana Bhardwaj, senior economist at Kotak Mahindra Bank, on their growth outlook going forward. Listen into what they had to say.
I would say at this stage, the odds are more towards a further upgrade of this number, i.e. tending towards a slightly lower contraction rather than higher contraction. But I would say for planning purposes, we should work with 7% contraction in real GDP. I think the inflation outturn will be higher. And the fact that we have had higher than expected inflation in the course of this year, when there has been so much of contraction for the first 6 months of the year, does tell us not just the supply side bottleneck, but the fact is there are regulation-induced cost of production problems for most of the Indian small and medium businesses, and that is the reason why even in a year of demand compression, at least for the first half, we are facing a high inflation outturn. The real problem will be the asset price inflation and the exuberance it creates, leading to malinvestments, etc. So I would be more worried about overheating in the Indian economy.
We have, of course, upgraded the GDP forecast earlier from a 11.5% minus to a minus 8.5%. That's where we stand today. Yes, there is a probability of a slight upgrade further, but anything beyond 7%, 7.5% looks difficult at this point.
All right, so those were the important comments and projections coming in from the economists for 2021. Let's slip into a short breather on Business Lunch on that note. And on the other side, we bring you the latest as the government's vaccination plan gets underway. Stay tuned.